Hey, we're in 2025 right now. Are you wondering as a business owner how you can get more funding? How can you get banks to think you're sexy? That's what we're going to talk about today. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you. You work so hard for that money, and you're now ready for that money to start working harder for you today. You want to become work optional, where you work because you want to, not because you have to. And you don't have to wait 30, 40 billion generations to do it either, right? You want to do it today so you can live that life that you love with those you love. But most importantly, guys, I know it's not just about getting rich for you. It's about living a rich life because as you're blessed financially, you now have a greater capacity to bless the lives of those around you. And that is exactly what I'm excited for today. Thank you for allowing me as we're now moving into our 10th season of this show. I think it's the 10th, or maybe it's 11th now. I'm losing track. I think it's actually the 11th season of this show we're actually moving into. Blows my mind, guys. So thank you so much for being a part of that. Thank you for allowing me to create a ripple effect through you. Hey, as a reminder, be sure to go on iTunes, be sure to rate us, review us. Unless you hate us, then don't do anything. Just keep moving on. But the rest of you, if you think this show is awesome, please let us know. Let everybody else know too. Thank you so much. All right, guys. So I'm bringing on a special guest here, Amanda Webster here. Now, Amanda, she's recognized as one of the leading authorities in business credit. Now, if you've been wondering, okay, how do I get my business credit to build? Because believe it or not, it's actually not exactly like your personal credit. Whether you have a great personal credit score, you can have a crappy business credit score. And banks may not want to give you money, even if your personal credit's great. It helps, but it's not everything. And that's what I want to talk about with Amanda today. She's not only that expert, she actually started in the legal industry, then transitioned over into this, where she can actually give people really create a ripple effect this way by helping people get access to credit and capital, which is the number one thing that business owners need, and also the number one reason that business owners fail. So I want to talk to her about that today. What are the myths? What are the lies out there you might see on social media? And what actually allows you to look sexy to banks? That's what we're going to bring on Amanda for. So, Amanda, welcome to our show.
Thank you so much for having me. I'm excited. It's 2025, getting all excited for this year. So thank you for having me.
Oh, absolutely. So you got to give us that backstory. I mean, how'd you go from like legal to this? I mean, what was the transition that happened here?
I feel like legal and finance really kind of mesh no matter which way you look at it anyways. But I always say it's such a cliche. COVID led me here
Mm,
because the law firm that I was managing at the time, they were not able to kind of sustain during COVID, which was unfortunately a lot of the stories we heard with small businesses, because that was a boutique firm that I was running at the time out of Tampa.
yeah.
And they just weren't able to survive. So the attorneys had to kind of disband, go on their own. And so I was left saying, what do I want to do? And after 17 years, I kind of needed something fresh and new. And this was 100% fresh. It wasn't all new. I've been kind of some of an expert in the personal credit space because I did a lot of divorce law. And
Mm,
unfortunately, that is something that goes hand in hand with divorce law, is understanding credit and the ripple effects from the divorce.
yeah.
So I landed here, and it was a great transition, and I've learned a ridiculous amount of things now, and I'm entering my fifth year here with Fund&Grow, and being able to help entrepreneurs just be able to survive in a lot of cases, because funding is one of those crucial areas that they don't realize what's out there. They don't realize what options they have.
That's a good point for anybody who's listening that might be an employee, where they are relying on a company saying, hey, you need to listen to what Amanda has to say here because I don't want you going out of business if there's another COVID crap or whatever might happen, right?
Right. Yeah. The government can do all kinds of fun things to business owners, especially the small ones. I mean, look
Mhm.
at the BOI stuff. We don't know what's going to happen. As we're recording right now, it's in limbo, but those are the kind of the things that they can touch the small business world and have a negative impact. And
Yeah.
maybe that wasn't the intention, but funding is one of the things you have to figure out in order to survive all of those changes.
Yeah. And I like how you kind of said, like, personal credit does kind of tie in. I know for me personally, I had to rebuild my personal credit score probably about two or three times over my life, go from like four or 500s back up to over 800 and things like that, which, you learn a lot. You learn about what works and what doesn't. And I know in the credit space, business credit specifically, I know I've learned a lot of things as I've built that up with money ripples. And it's not the same thing, is it?
No, completely different. I think one of the biggest things that people have to understand is when you turn 18 and you have a social security number, you automatically will start getting a credit profile, right? You'll
Mhm.
automatically start having the ability to build and earn and do all the things or screw it up, which
Yeah.
we've all probably done if we're old enough, right? I'd say life
Mhm.
events always trigger those things. But in the business world, it's not necessarily an automatic thing. Your EIN isn't automatically earning a credit score. There are some things that
Right.
you have to do as the business owner to actually even start building a business credit score. And I think that's like the first layer you have to peel back that people don't understand. There's a little bit of stepping stones you have to place in order to even get a credit score on the business side. And then obviously the credit modeling is completely different, different set of rules.
Yeah, and there's some really simple things people can do to start building that credit score. Like I didn't realize how important things like was updating your address on everything. It's using the same name in the same way instead of having all these different aliases. I didn't know that actually hurt my score.
Yeah, no, it does. And then people don't understand that it's not the same credit bureaus, right? There's two of the
Mhm.
three that are the same in the business credit space. You know, Experian and Equifax are in both spaces, but the third one is actually done in Bradstreet, and you have to
Mhm.
actually register. You have to get your own account set up. Otherwise, they're not reporting anything. So it's knowing where you need to be set up and also knowing how to pull those reports and look at those reports and then understanding what actually makes up that report.
How would somebody even know like where to go to do that?
You wouldn't necessarily. Unfortunately, there's not a lot of resources that people can just kind of grab. So, unfortunately and fortunately, it's on both ends, is people go out to social media. They go to YouTube. They go to the University of Google and figure out things through these searchings.
Mhm.
There is the fortunate thing that there's a lot of free information, which is great. Getting that free resources, free education is amazing. But there's also a lot of misinformation out there. And, you know, we were talking before the show, the whole hack. Everybody thinks there's a hack for everything.
Mhm.
And sometimes those hacks are inaccurate and can lead to some damaging things. There was a chase hack not too long ago through TikTok where people are now getting arrested for what they thought was a hack and really they were stealing money. Just didn't realize that's how they were doing it. So it can get crazy.
Yeah. What are some of those hacks that annoy you to death that you see out there, maybe are still persisting today?
You know, some people have a misconception of what business credit even is, right?
Mhm.
There's a couple of arms of business credit and how you build it up, similar to your personal, how you have installment loans and personal or secured loans and all. And the business side, you have business credit cards, you
Mhm.
have business loans, whether it's a term loan, an equipment loan, a business line of credit, those are all considered loans. And then there's corporate credit vendor trade lines. So those are the three type of lending options that are out there. One of the things that I see all the time is that they say, oh, you can get business credit without a personal guarantee. That's not necessarily true. In the
Mhm.
beginning stages, you can give a personal guarantee and be able to get business credit cards. You can get business loans once you've been in business for a certain amount of time, still might have some personal guarantee components to it, depending on the lender and the type of loan. The only one that has no personal guarantee from day one are the corporate trade lines. But understand that a corporate trade line is a direct situation where you go to Home Depot and get a corporate account, right?
Mhm.
You can only spend that at Home Depot, right? You
Right.
can't go do anything else with it. So, in order to get business credit cards to have revolving unsecured type of credit on the EIN space, a personal guarantee is kind of the only option unless you have a extremely experienced business that has verifiable gross receipts in your business bank account of at least 50 to $100,000 a month is typically when you can get a personal guarantee removed, and you have to have that business credit score. You have to have actually
Right.
built the business credit score to be able to stand alone. So I think that's one of the things that they're kind of twisting a little bit because it's partially true. You can get the
Mhm.
corporate lines, but you can't get the real lending until you're got a couple years under your belt, got a good business, got a business score, which all takes, it's kind of like a revolving wheel. You got to have all these pieces.
Right. Well, that's kind of like I see a lot of the credit card stacking type of stuff out there, which doesn't do really good for your credit score anyways. It can actually kind of hurt it more than anything, right? And that's even on the personal side, not including the business side too. What are your
Yeah.
thoughts about doing those kind of strategies?
So credit stacking on your personal side is a terrible idea.
Uh-huh.
Because one of the things that actually reduces your personal credit score the most is using too much of your available credit limits,
Right.
which is a conundrum in itself. It doesn't make any sense, but that's kind of the rules that we have to play by. In the business world, credit card stacking really is just a weird term that the industry has created to have multiple business credit cards to stack into a higher amount of lending. So
Mm.
if you have a Chase card with 50,000, an Amex with 50,000, now you have 100,000, right? It's literally just saying, "Oh, I have multiple accounts that I can use for this."
Yeah.
In
It's
the
not like trying
business
to
credit
transfer
space,
balances, all the time to try to stay
no,
at
don't do that.
0%. Yeah.
Yeah, don't. The problem with business credit cards themselves is balance transfers are far and few between that you can even do. There's
Mm.
not a lot of lenders out there that allow it anymore because of the ripple effect that has happened from people doing that and getting themselves into a really bad space.
Mm.
Business credit cards, even in a stacking model, because we do the stacking model at Fund and Grow on
Mm.
the business side, is for short-term debt leveraging. Should
Mm.
not be for long-term. That shouldn't be
Right.
your play on business credit cards because just like your personal cards, they have a much higher interest rate than a lot of things out there. Now, there are business loans that have high interest rates right now. We're hoping to see that change. Hoping by second quarter, in 2025, that's what we're
Mm.
hoping for. This first quarter, don't think it's going to be that quick, but hopefully we'll see those interest rates come down a little bit on the business line of credit and business term loans. But the credit card stacking really is just having multiple accounts.
Right.
The the snowball or whatever effect that people talk about where they're transferring the debt over and over to keep the lower interest rates, that will only work for a short period of time. That's only going to work over 12 months here and 12 months there because there's not enough offers out there to continue it. But what there
Right.
is great rewards programs and, quote unquote free money from using business credit cards, but you don't have to do it in a dangerous way. It should be for things that are creating quick ROI so that you're not having long-term debt. Credit cards should never, personal or business, be for long-term debt. They should be for short-term projects, getting you off the ground. So if you do get that 0% offer, you've paid it back before the interest rate kind of kicks in. We use business credit for everything here, but we're paying it sometimes weekly payments to keep any interest from ever charging onto the accounts.
Right. Especially trying to get the statement balances down and everything else.
Yeah, yeah.
And what about like I get all these offers, whether it's from PayPal, it could be from QuickBooks, whatever. It's like all these capital type loans, and they seem like they're very short term type of loans. What's your opinion on those? Are those things that are more destructive? Are they useful? What do you think?
So I think it depends on what your business is, right? So if
Mm.
you're getting a loan for a project, but you know the return's going to be 3 months from now, then it could be okay. I think that always when you're looking at business funding options, there's a cost to capital to everything you do. Personal, business doesn't matter, right? We all have a cost to get a car loan. We have to factor that in. It's just figuring out, do you have enough in that profit margin to absorb the cost of capital? That's going to be, it's a math equation. And only you or your accountant, can figure that out to know if that 6 month, short-term financing is going to make sense for you. Or do
Mm.
you need to look at longer term, right? If you're looking for big money, longer term, you're going to need to go to things like, as much of a pain it is, an SBA loan, or you're going to want to go to the business term loans or business lines of credit. But that's a conundrum because you have to also have so many years in business to get those things and
Right.
provable receivables that they can see, right? So business credit cards, you don't have to have the receivables. You don't have to prove, you don't have to give tax returns, right? So it's kind of a way of having, placeholders to get you from point A to point B, which is brand new or lower, receivable business into that next bracket of you've been in business for 2 years, you've got $30,000 a month in receipts, things like that. It's kind
Mm.
of a bridge to get you there. And then the business credit cards become more of a fraud protection. You shouldn't be using your business bank account card, just like you shouldn't use your debit card in the personal world because there's no fraud protections. I mean, they're there, but not in the way that you'd want them to be because they're tied to your cash flow. So they
Right.
become a different tool at that point, and more of a leveraging for short-term projects and things like that, which are the same kind of loans that you're talking about. What's the cost of capital? What's the interest rate? What's the points? What's the fee for setting up that account? It's kind of all those different pieces, factoring accounts, all of that have a cost. You need to look at each piece and see what makes sense for your business and your return rate of how quick you're going to get that back in.
If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. So, what's the kind of lending that works best if somebody's just brand new trying to start their business? Where they don't have the 2 years, they don't have 30,000 of receipts coming in and things like that every month. What's the best strategy they could start with right now?
Really, the only strategy you have is business credit cards and those
Uh-huh.
corporate trade lines. That's really the only thing you have at your disposal. If you're in certain markets, you might be able to look at grants and things like that as well. But
Mm.
finding a grant writer and doing all that is not fun. If you're in a high risk industry, sometimes these type of lending is the only option longer term. Because there's certain industries that the lenders just don't like, and you're going to have a lot of proof before you can get in those approvals. So business credit cards and those vendor trade lines are usually your best option from year 0 to year 2. And even at year 2, it'll depend on your receipts.
Mhm. Right. And then you start building more banking relationships and things of that nature, right?
Yeah. We always suggest that having your business bank account with one of the major lenders, because that's who's going to be your heavy hitter in the beginning. Diversifying that, maybe having a
Mhm.
couple of accounts, having your spending account at one. So you're building relationships, because lending is all about relationships, no matter what way you look at it. When the underwriters get into that file, they're looking at, can they see your spending habits? Do you have a relationship with them? My prime example is Bank of America. Bank of America will
Mhm.
not give you a business card unless you have an existing relationship with them on the personal side, or a business
Right.
bank account where they can see your deposits. They just don't. And that's where the relationships come in.
That's one thing that surprised me too is I was very comfortable using that one credit union that I had a long history with. I knew I had a good relationship with them, but then realizing I need to build other relationships, even banks that I thought I used to trash talk, like the big ones, thinking,
Yeah.
oh, they suck, they don't like me or anything else. But then I realized, oh, but I kind of need them, especially if I want to really diversify and having to hold money in different accounts and keep certain minimums and things like that, which for me was kind of, it felt a little bit more scattered. Like I see the sense in it, but man, as a business owner, I thought, well, can I just keep it with one? But really, if you want that protection, you really need to have multiple accounts, don't you?
Yeah. It's a good idea to keep your spending account here, this project over here, your personal
Mhm.
account over here. It's helpful, but also again, it's more about the relationships it builds, because there
Yeah.
are several banks that's how they operate. I always tell people, if you want an Amex business card, you need to have an Amex personal card first, because
Mhm.
they're going to give you a business card if you have good credit and everything, but you're going to get like $2,000. They're like the
Uh-huh.
$2,000 king, right? But if you have a personal card and you've treated it well, and let's say you have 5,000 or even $10,000 limit on your personal card, and you've not had it for a couple of years, they're going to probably lend you double that on the business side, because they're used to your spending habits. So it's not just who you bank with, it's who you have accounts with in general can stem from personal into business, right? It can jump over, but it's good to be diversified, because you don't want to have only one option. Because what happens? That bank doesn't survive. We've seen a lot of
Yeah.
banks crash over the years. If that happens, all that relationship was tied to that one lender.
And there's some of those banks that really just aren't good for lending anyways, right? That you might be banking
Yeah.
with, and even if you want the money. And that's kind of how I see it, right? It's you never get bank money when you need it. It's only when you want it, right? If you
Yeah.
need it, that's the time they never want to give you money. It's just like insurance, right? It's like the time that auto insurance companies will insure you is not after the accident, it's before you have the accident. And I see that
Yeah.
with lending too.
Hey, listen, I'm in Florida. You can't get homeowners insurance if there's a hurricane even named somewhere in the stratosphere. Doesn't
Mhm.
matter if it's coming at you. Yeah, it's the same thing. And with business credit, you have to take the time to build it, because if you need $20,000 or $40,000, the time frame is adjusted by how much you need. If you need $100,000, that doesn't come overnight. It takes a minute to get to that point.
It sure does. Well, before I ask kind of a few more questions, I know that people are going to be asking you as well. What's the best way people can follow you, learn about, the things that you teach here, and even possibly hire you if they want to be able to get, more bankable that way? What's the best way they can do that?
So connect with Fund and Grow, we always set up a dedicated link so that people can just get in and find out what we're doing. We do a free consult, all that stuff.
Mhm.
And I believe we should have the link for you for your notes. It should be fundandgrow.com/ money ripple, or is it ripple money?
Money
Where
ripples,
does it go?
probably.
Money ripples. It must be money
Yeah.
ripples. So it'd be fundandgrow.com/ money ripples would be the link to get in, learn about it, see exactly what our business does and how we help business owners obtain business funding. If you want to follow me or see what I'm doing out in the world, that one's even easier. It's just fundandgrow.com/ Amanda.
Perfect. Now, what this question I'd ask you is, what's what's the one thing you wish everybody knew before they talk to you? Or what would make your life easier if they did this before even talking to you?
If they just had the education of understanding what a personal guarantee means so that it's not such a bad stigma, because there's a
Mm,
certain uh, Dave guy out there in the world that puts a lot of kibosh on credit, and I don't think he understands that it's translating into the business world the wrong way.
mhm.
And kind of knowing where you want to go, right? What is your business, ideas as far as what you're going to need for funding and a realistic timeline? Because sometimes people call us, they're like, oh, I just need funding, but they don't really understand what they're doing with it. So just understanding what you have, what you want to do, what your plan is a really good thing. That's really all you need in order to have like that first, consult with us, is to understand that piece. But maybe the bad stigma on personal guarantees would be a nice thing to get rid of.
Well, I totally agree with that too. And I've noticed this too. I mean, even in situations where you do get a business credit card or something like that, it may not show up in your personal credit. It's only the guarantee if you start to default, if you stop
Yeah.
doing it, then it can show up on your personal credit as a bad thing. But yeah, there's that personal guarantee and there's some risk, but at the same time, if if you're not planning to go into business to be, an unwise steward, I wouldn't think you'd be as nervous as somebody who knows they're just pretty much trying to be a flash in the pan. They're probably going to go bankrupt.
Yeah.
That's a different story.
Well, I always tell people, listen, you're going into business to be successful. That's why everybody starts a business, right? Or
Yeah.
everyone starts a startup to be able to have some new invention or something, right? Or a SaaS.
Hmm.
I think that if you would just stay within your comfort zone, even if you get $50,000 on a Chase card, it doesn't mean you have to go spend all $50,000. It's the
That's right.
beauty of revolving style credit is it's available if you need it, but maybe just start with a couple thousand and what you actually need and be able to build up that kind of that that threshold of where you're comfortable. I think is another piece. I think people need to understand just because you get the limit doesn't mean you need to spend all of it. You should only be spending what you know you can return, even if the
Absolutely.
worst case scenario happens.
That's the difference between us and Dave Ramsey, right? Because that guy's teaching like credit's always bad. You guys suck. You don't know how to deal with it. It's like if we're in business, we're learning how to be better stewards of our money and our resources. Why would we ever put money into something that's not going to create a good return? That's just what gamblers do, and gamblers never last in business anyways.
Now, listen, unless you're born with a silver spoon, I mean that respectfully,
Mhm.
you're going to have to debt leverage in your life to be successful. Most of the, US population does not turn 18 and have a trust fund handed to them, right? So we're
Right.
going to have the ability to borrow to get ahead. That is just the life that we live. In order to get a car to drive to work, in order to rent a house, whatever it may be, those are things that are required. And so I think that's the missing piece for someone like Dave or in that world. The American dream of living debt free is one I also have, right? I want to be debt free all the time. It doesn't necessarily mean it's reality when you're a 20-year-old just starting out or even a 40-year-old brand new business owner, right? Like those are things that aren't reality for most people.
That's right. And I know it's always nice when people say, well, I bootstrapped everything, which I did early in business too, especially because I destroyed my credit. I kind of had to bootstrap. But
Yeah,
let's be honest. I mean, you're right. I mean, if you really want to grow and create something that really creates a legacy as well, you might have to leverage a little bit of debt. It might only just be your mortgage. It might be buying a car. You might be
right.
bootstrapping the business, but you may not have to. I think that's
Yeah.
an important thing to distinguish is that business owners, again, if they're wise stewards of their money, can make a better return than the debt they service on that loan that they're borrowing.
Yeah. Cost of capital, always, right? Hey,
Right.
instead of bootstrapping, keep the money in an account, high investment account.
Yeah.
Do the business credit or the debt leveraging route. And if it doesn't work, you still have that money sitting there, but at least you didn't cash strap it in. So,
Yeah. That's why I bought, I could have bought my car in cash, right? If I got offered 3.99% and I know I can make way more than 3.99%, why wouldn't I do it? Not to mention I have
yeah,
control of my money versus the bank having all my money tied up in a depreciating asset like a vehicle, right?
yeah. Other people's money always should be the dream.
That's right. Yeah. Well, last question for you. Obviously, this is the Money Ripple show. We talk about the ripple effect, that we create in people's lives. What do you feel is your ripple effect, Amanda? What do you feel like you're here to do or can help, even if it's beyond what you do in the credit space? What do you feel like you're here to do on this planet?
I have an innate kind of being inside me of just teaching. And
Mm,
I don't mean like going in a classroom and teaching type teaching. I think it's just teaching in any way to improve someone's life. In the legal world, it was helping people through a very difficult time and teaching them and giving them resources to be able to be successful through that transition, because that life transition of a divorce is very hard. And then I
mhm.
had the great, ripple of being able to help people through adoptions, which was an amazing experience. And being able to participate in adoption days in the course that was a very fulfilling moment. But I think educating and teaching people on all different things. I love teaching people. I go and teach with the youth locally about how to be responsible with credit as they turn 18, right? That's a
That's
piece
great.
of education missing in the school systems, at least here
Mhm.
locally. So I think it's that teaching my kids to hopefully be good humans. I mean, just trying to do that. I think that's just kind of my nature. And I think that's what I was put here for, is to help teach people and maybe learn a little bit from my mistakes I've already made, which I'm fully transparent and vulnerable and have no problem with that.
I love it. That's great, Amanda. Well, appreciate your time on the show today. I know I got a lot of value just from hearing this as well. And like I mentioned before going on the air, I've been doing a lot of the process and stuff you guys have been talking about. So it's really cool to kind of hear your perspective and get further education on that. So again, thank you for your time today.
Thank you so much for having me.
So everybody else, be sure to check out fundandgrow.com/money ripples. Definitely check that out, especially if you're looking to, like I said, it's not just about getting debt, right? It's about having access to capital when you need it or if you need it. That's the big thing. And so, guys, you can never have access to too much money. I'll tell you that much, especially if you're a wise steward with your money. So, guys, go and make it a wonderful and prosperous week, and we'll see you later.